to cut or not to cut. The BSP says yes to rate cuts possibly by August ahead of the Fed. Meanwhile, it was a quiet week in the PSEI as we continue to see heavy net foreign selling, and we expect it to continue until the end of May. So this is the last week of May. Let's look at some potential bargains. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. Remember, it was only last February when Finance Secretary Ralph Recto told reporters that we are going to follow Fed rate cuts. If they are going to start reducing rates, then we can possibly start reducing our own rates. But come May 24, right, Philippine monetary officials, Fed Remolona, doesn't care. We don't care that much when the Fed cuts. What we care more about is our data. And, you know, it is as it should be anyway, right? Our situation is ours and their situation is theirs. We should not be dependent on them. So, which is good news. But the prospect of earlier rate cuts for the Philippines has the DXY detaching from the movement of the USD PHP as we see how the peso has depreciated to 58 peso plus, no, versus the dollar, despite the dollar depreciating. So I guess this time the peso is indeed weaker because it is actually weaker, right? So maybe the peso was weaker because the government had interest payments climbing to 46% last month as the budget surplus narrows in April as government spending rises. So it just goes to show how quiet the market was last week when we start highlighting budget surplus numbers here in the Philippines. So the government went on a spending spree, handing off subsidies here and there, which saw government spending climb to 12.9% last April. Preliminary surplus numbers are at 42.7, which is lower than the 66.8 surplus last year. Well, we do get revenue increases during April. If you see here, the January to April is on a budget deficit, but every April we are usually in a surplus because April is tax collection season. Meanwhile, a quick look at our stocks after the earnings season, see how their movements were since their announcements. We see here ASEN and Wilcon leading with AEV and BDO as the laggards here. And what's funny here, Wilcon missing estimates but still managing to grow up to 20%. Whatever the hell the foreign buyers are seeing with Wilcon's prospects after their earnings miss, I don't know. And we also saw companies with good earnings beat suffering some pullbacks like BDO and SM. A quick look at the sectoral performance of the PSEI for the past month. We have telecom and utilities leading the way, but I guess the opportunity really here could be along the sectors like real estate, consumer discretionary, and industrials. Now, I don't know about healthcare, so I'm not going to look into that. Financials, of course, with the prospect of rate cuts. Financials, understandably, not getting some love from the markets, right? So the question is, for next month, will telecom and utilities continue to lead the way, or will there be a rotation into these sectors? But if there is going to be a rotation here, we can probably look at some bargains. Let's take a quick look at the net foreign buys and the net foreign sells, at least for last Friday. Let's look at the favorites here. ICT Globe getting some foreign buying. SM Industrials, right, getting a buy. Keeper, consumer discretionary. Banks, MBT, only MBT getting some love. Utilities, discretionary, industrials. AC, right? AC and SM could be a good time for them to bounce. ASEN, right? Energy and consumer discretionary. But see here, the sell-offs here. Real estate, SMPH, Ali, A-REIT, sell-off. Banks, of course, with the MSCI rebalancing, AEV, getting a big sell-off. BDO, banks, also discretionary, real estate, and conglomerates. We can see some pattern here in the sectors that the foreign investors are selling off and buying. So let's look at the PSEI charts. The market went nowhere actually. We opened up last week at 6,636. Where did we end? 6,619. So we are stuck between the 200 EMA and the 50-day EMA, and we could continue to consolidate there. We will eventually get squeezed, whether to the upside or to the downside. We'll have to see. But looking at the short-term trend, we have a short-term uptrend here. If we look at the longer trend here, let's look at the weekly charts. Let's look at the longer trend. We are seeing a longer uptrend line here, so we could actually revert back here because there is a resistance here at the longer downtrend line here. Again, the PSEI could get squeezed either to the upside or to the downside. But for the immediate future, let's just go back to the daily chart. For the immediate future this week, we have a very strong resistance here at this point, 7,000, right? Because there's also a trend line there. For this week, we could still go down because of foreign pressure, but hopefully we start consolidating along this area before the market decides where it wants to go. Now, if we are going to experience more foreign selling for this week, we might start to see some bargains, as we may expect foreign selling to ease off by June. My bets for industrials would be AC, of course, AC, SM, and probably AEV, and also GT cap, right? So look into some good levels to buy in. SM, a good level to pick up here, 870, 854, right? AC also maybe a good level to pick up as it held the support here at 617. GT cap rounding off, also stuck between the 200 and the 50-day EMA, maybe a good buy every time it touches 617 or maybe 611. AEV, is this the bottom for AEV, right? It can still go down because again, there's still selling pressure as the MSCI rebalancing continues this week. So watch for its reaction at 37. Hopefully it holds here at 37. If not, it will go down to 34. Maybe a good time to buy AEV, right? But again, this is going down, so we don't know if this is really going to be the bottom for AEB, but it looks like it so far. At least we are expecting a short-term bounce once the selling pressure abates, no? So for properties, my favorites would be Ali, SMPH, and RLC. And of course, REITs, we have A-REIT pulling back to 33. Remember, these are our buy zones, 33 and 32. When it touches these zones, you can buy some. If it touches 32, buy more. Of course, the banks retreating. BPI and MBT still quite strong, but we may see some selling pressure in the coming months. Apex may be a good time to buy. Look at that, buy the dip here. We are bullish on gold, so Apex may be a good buy at this level. JFC also one of my favorites. It is stuck in the middle of nowhere, 230. It's in the middle of nowhere, 260 and 204. So maybe just a hold on that if you still have JFC. Monde, buy the dip scenario here. Consolidation happening here in the next few weeks, I think. No? So AP also, we have not seen a lot of buying opportunities for AP. If it goes down to 33, that would be a good level to buy. Check how it reacts to 34.20. It might not even go down to 33, but check how it reacts here with this selling pressure here. We expect it to consolidate here. Watch out for some patterns here before buying in. And of course, we have the foreign favorites from last month, no? ASEN, Globe, TEL, and Converge. Converge might still revert to the mean. If you want to buy Converge, maybe wait for it to retrace and see if it holds support. TEL, reversion to the mean. If you want to buy TEL, maybe a good time. Globe, wait for it to hit support, defend support, or maybe revert to the mean. ASEN consolidating here. Let's see if the moving averages can manage to catch up. And you know, if you're feeling FOMO, and then enter, but not one of my favorite stocks though. Let's go on to the global markets. US economic output hits a 2-year high as the S&P Global PMI numbers came in at 54.4, significantly up from the 51.3 reading last April. Now, in contrast, new home sales declines by 4.7% to to a 634,000 annual pace. But last week's highlights really was a series of talks. Look at that. A series of talks. No? Everybody wanted to have their say about the economy, but it all boiled down to the FOMC minutes. And the minutes showed officials rallying for rates to be kept higher for longer and even hinted to further tightening if warranted. No? So this was enough to overshadow Nvidia's spectacular earnings last week, as investors expected Nvidia to lift the markets, no, single-handedly. Nvidia beat analyst estimates yet again. Just look at these numbers, right? Earnings per share, 6.2, a growth of 461%, revenue of 26 billion, a growth of 262% from the last year. Look at these numbers for Nvidia. But the Fed talks, no, caused the Dow Industrials to suffer its worst day in a year despite the earnings beat of Nvidia. So Nvidia versus the Fed, Nvidia 0, Fed 1. Right? So let's look at the charts. The S&P 500 also stuck within a range. What happened to the S&P 500? We opened at 5306. We closed at 5305. Down by 1 point. But not before. It hit a new all-time high at around 5,349 here. This was the day of the Nvidia's earnings beat. No? So the market went up but also went down here at this critical support zone. Now let's look at the 1 hour chart. What happened to the markets here, right? So it broke to new highs, but it also broke this low, right? So we had a high here and a break of trend here, stopping here at a very critical zone. There's a demand zone here where it found demand. So what typically happens during this situation? So we have a break of structure here. It went high, a break of structure went down. So this is going to be a trend change for now. So a trend change here means that rallies here will most likely be met with sell demand. So if we look at the Fibonacci's here, what usually happens here is that when you see a break of trend here, the market will rally to the 61.8 fib, which it almost did, and it will find sellers here. So the prospects for the S&P 500 in the next week, it will be a shortened trading week in the US. No? So we could expect selling pressure to happen. So let's look at the next level of support here. It could go back to 5,258, or better yet, go down to 5,225. Now, if you go to the daily charts, I would love to see the markets go down to that level, as again, it could be a mean reversion play, and at this level, it can find some buyers to get the necessary momentum to push the markets back up. Let's look at some of the scenarios. Does the US market still have some legs to run, no? In terms of forward PE, while the large caps forward PE are at 20.6 PE ratios, we still have some great bargains in the market. It has so far been a good earning season, and the PE ratios of the mid caps and the small caps have resulted into some attractive PE ratios, 15.7 and 14.7. A quick look at the Russell 2000, the small caps. Like if we take out the non-profitable companies in the index, we can see how the PE ratios really haven't caught up with earnings growth. So we could still see some good opportunities, especially in the small caps. A quick look at the historical trends comparing this period, no, with similar periods in the past. We are tracking closely with these historical movements. The black line here is the current S&P 500, so we can still see a lot of upside potential, but not without some significant bumps, no, along the way. The S&P 500, as mentioned, hit another all-time high, the 24th for this year. How many highs are analysts expecting for the year? 61.7. I mean, we're not even halfway. Hopefully, we do get another good year ahead of us. But in the meantime, let's get through the May selling spree and welcome June with open arms. Let's start to look for some bargains. Of course, my bets, industrials, discretionary, and real estate. Real estate maybe later. The hot season is finally over, and hopefully it will also rain in the PSEI soon. So that's it for this week. Please like this video. If you found the information useful, please subscribe to the channel for more updates. Then again, good luck on your trades. Please manage your risk accordingly, and I'll see you again next week. Bye-bye.